Late last night, when everybody was asleep, the Bank of Japan decided to go ahead and raise their interest rate from minus 0.1 to 0. This is the first actual rate hike that we've seen from Japan since 2007. And what do you think it did to the price of the yen? Do you think that the dollar yen would go up in this scenario or down? I would guess down, but I would be wrong because it actually flew higher even though the yen raised rates. Now, why would this be weird? Well, think about it. If the Bank of Japan raises their interest rate, usually that is accommodated by a strengthening currency. But we didn't see that. We actually saw the opposite. We saw the yen get weaker while the dollar got stronger, which is weird. But you might say, oh, well, maybe it's just that the dollar is looking stronger. Not quite, because look at this. The yen actually weakened against several currencies. Here's the pound yen. So it does seem like this is an isolated yen movement, despite them raising their interest rates. I'm going to be honest, this one's a little bit weird to me, and there's probably something fundamentally that I'm not understanding fully here. But I did think that that was an interesting thing to bring up here as we get started in this video. Other notable things, the NASDAQ is selling off. Gold is, it's chopping around here a little bit, and the dollar index actually seems to have just broken out of a bit of a daily chart resistance. We've got a whole lot of stuff here to cover, so let me invite you to hit that thumbs up button as we start out today's video. It really helps out my channel. And with that said, let's jump in. Other key news here is something we got out of Canada. We saw inflation pretty much across the board really cooling out of Canada. And remember, what does cooling inflation usually entail? It usually means the central bank of that respective country may look to cut interest rates because they can, right? Because the inflation number is coming down and this nominal decrease is like, hey, inflation is showing some serious progress. We may be more in time, more willing to cut rates sooner, which of course actually causes the Canadian currency to weaken. Let me show you that. We're looking at the Canadian dollar against the Swiss franc on an hourly chart, and clearly you can see a big sell-off. But if you don't trade CAD pairs, wait just a second. This still matters to you. It actually is sort of a positive thing for gold, and I'll talk more about that as we jump over to the gold chart. So it's no secret that this week is a huge week. We get central banks all over the world reporting stuff. We've already heard from the Bank of Japan clearly. We've seen inflation numbers out of Canada. We hear from the ECB, the Australian Central Bank, the Federal Reserve. We hear from everybody. And seeing some inflation numbers coming out cool for Canada could suggest that the Bank of Canada might ease up a little bit, as I just suggested. If that actually becomes a trend in Western central banking, it may carry over to other places like Australia or the Bank of England. Perhaps there's some softness in line for those too, as oftentimes I make mention that central banks are kind of like a herd of buffalo. They typically follow each other, and the Fed is like the biggest buffalo in the herd. It's like the big daddy buffalo. I don't know. It's the one that a lot of times other central banks look to. So tomorrow will be very, very important as we prep for, again, the Fed statements, the economic projections. This is your dot plot, by the way, which will give us a number. This is what I'm most interested out of the entire week personally. Well, there's two things. This number is so important because it will tell us pretty definitively how many rate cuts the central bank here in the US thinks we're going to get. Are we still on par for 3 like they mentioned previously, or has that number come down to 2? We'll have to see what they have to show us with the economic projections. At the same time, we get the press conference. This is where we're going to hear from Jerome Powell and how he's taking all of this recently hot inflationary numbers. Let me remind you of those really quick. So inflation has been coming down, but in recent times we've stagnated and we are still above our 2% target that the central bank here in the US really wants to see. Let me show you. I'll add some other currencies as well here to the picture. We're looking at the Edgefinder's inflation number, by the way. It's the CPI year over year number. And what we can see is, again, the blue line represents, or the blue charts or bars represents the US inflation. And look at US inflation. It's pretty much flat for several months here. And remember, the target, guys, is 2%. This is what the central bank here in the US wants to see. we have not been making a meaningful decline towards that number. And so this elevated level of inflation is still a problem for the Fed. And it's possible that tomorrow we'll get some more clues from Jerome Powell on what they are going to do about it. Are they going to keep that interest rate higher for longer to hopefully get this inflation number to come down? Or with the pressure potentially of an election year here, are they going to cut rates anyways, which could lead to inflation starting to rise again as borrowing becomes more affordable to everyone. And yeah, it's going to be an interesting time tomorrow. Tomorrow's going to be a huge event. Quick reminder, I will be live streaming that event. If you turn on the notification bell on the channel, you get notified when we turn on the screen and go live. So back to gold for a second. I still have a long position, but by the time you watch this video, I might be stopped out of it. Seems like gold is taking on a little bit of a sell-off here today, and honestly, I would be happy to get out of gold if my rules for exit hit, basically trailing below this previous low. If we stop out here today, I will more than happily take my profit and kind of reset ahead of this FOMC event. Otherwise, I may hold through the news. It just kind of depends if we take out these lows. I'm going to let price action guide me from here, as currently the Edge Finder's giving the gold market a neutral reading. Let's go take a look at some of that. So what I've got on the screen here is I've selected basically the metals, major currency pairs, crypto, and commodities. So we have oil, gold, and the major currency pairs. And this is currently our bullish and bearish readings from the Edge Finder's output summary scoring sheet. It looks at all sorts of different things like CPI, labor statistics, interest rates, retail sales, services PMIs, manufacturing, all this economic data, as well as sentiment tools and technical tools to give us a bullish or bearish bias. I don't leave home without it, and I trade with this every single day. It is a company product built by my company, A1 Trading. If you're interested in getting access, by the way, for 30 days, you can find some more information down below in the description. There's an application process. It takes really like a minute or so to fill out an application, and someone from my staff will reach out to you to give you access to that 30 days so that you can check out the tool. If that's something you're interested in, take advantage. So right now we're getting some interesting readings. Bullish on dollar, yen, US oil, and a bunch of neutrals, including gold, by the way. So this is why I'm just trailing on gold. It's neutral. If I get trailed out, I'll take profits. And then we're getting some more bearish readings on things like the Kiwi dollar, the Australian dollar, etc. So kind of interesting to see that. If we also expand our search here to, let's do just indices for a second, you can see we really have a lot of neutral readings, and I'll be looking this week to see if we can get some confirmation one way or the other. Right now, what we can see is that the closest one to a bullish reading is the Dow, and the DAX is already a very bullish one, of course, the German index, but not one that I personally trade very frequently, so kind of giving me neutral readings on things that I watch. And the S&P 500 is still trending up to, well, recently it's been trending very well, like higher low after higher low. Though I am a bit cautious with neutral readings on the Edge Finder, I'm not going to be taking any positions, especially ahead of FOMC. This thing could very quickly drop or rocket through the highs based on what we hear tomorrow. And if we do rocket through the highs and we get confirmation from the Edge Finder, I'll just look for pullbacks. And if we pull back, I may look for opportunities on the long side, as long as the Edge Finder starts to point bullish. But again, waiting for my compass, if you will, to really set me straight on a setup on the S&P. Same thing for the NASDAQ. The NASDAQ has done actually a little bit worse recently. Tech's been selling off here this morning. Again, erasing that big pop that we saw yesterday. This actually looks like a little bit short term of a more of a bearish reversal, but I wouldn't read too far into the technicals right now, as FOMC tomorrow is going to take precedence over any technical level we've got drawn. Because if tomorrow they say, yeah, we don't see rate cuts happening as much, boom, down goes the NASDAQ, down goes the S&P. And again, this market is really resilient, so will it stay down? I don't know. But if they say, you know, rate cuts are still on, this market might rocket. So right now, I lean far more into the fundamental factors and won't really take any looks closer into the indices until we start to see Edge Finder compass confirmation. Also, I often get the question, how can you trade indices if you're in the US? You have a couple different options. You can trade with futures brokerages. I personally trade with WeBull. There's a link down below in the description if you're in the US or UK, I think also Singapore as well. You can sign up with WeBull. It's a wonderful broker that you can trade directly on TradingView with. And also, if you're looking to trade directly on TradingView, but you're not in one of those those countries, there are some links down below in the description for the brokers that support my channel. There's also some sign up perks. You get some free shares or free products or sign up bonus. There's all sorts of cool stuff. Check it out down below in the description. Please note these are referral links, and if you choose to use them, you will be supporting my channel, and I greatly appreciate that. Here's a look at retail positioning as we go into this main event here this week. Seems like Kiwi dollar and Australian dollar, the retail traders are very parked heavily long on this one. Same thing with pound dollar and dollar Swiss. These are, generally speaking, currency pairs that traders are very heavily long on, and it's giving us a contrarian bearish signal. As we know, retail typically loses money. It's not perfect, and they are right sometimes, but I generally use this as more of a contrarian indicator. If we take a look at the other side of the table, we see dollar CAD, SPX 500, USD JPY, and the DAX. These are getting heavily bearish readings from retail traders who are betting against that rally in the dollar yen that we talked about earlier, etc. So this is actually giving us a contrarian bullish signal just based on retail positioning. That is, of course, by the way, factored into the retail positioning scoring mechanism within the Edge Finder's output. And a lot of traders out there are probably wondering about dollar yen right now. Here's USD JPY selected on the smart money versus retail positioning indicator, and what you can see in blue is that institutional money seems to have steadily been increasing their position on the dollar against the yen. Meanwhile, after this recent run-up, retail traders have gotten increasingly bearish on the currency pair. Thought that was really worth mentioning, that again, oftentimes retail traders are on the exact opposite wrong side of the trade, while institutional money, which we track in blue, is on the long side of the trade. Remember, if you'd like to try out the software, there's a link down below in the description to sign up for our 30-day access trial. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel, and we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.